Good morning, traders. This is Rick Majors here at Opteck.com. Welcome to today's daily market briefing, Thursday on May 15th, 2014. Wonderful day in the market so far. Two things we want to be focusing on today. Again, Ukraine and America, all right? First of all, Ukraine, the situation. This is what we want to be talking about right now. Haven assets. What is a haven asset? Simply, in times of instability in the market, let's take, for example, what's going on right now with US dollar, the gold market, and the euro. Investors tend to jump around through assets as they see instability coming. Now, the dollar is going to probably spend the day in a bit of a dropping point. We have some announcements, too, that might not come out as well as needed. Unemployment claims and the core CPI coming out at 1:30 p.m. GMT time here in Britain, talking about a bit of a rise in unemployment. It's not something that exactly was unexpected, so we're not too worried about it. It will bounce back. Dollar is still looking good to go up for the end of the month, but it's probably going to drop a bit today. While this is happening, people will switch over to things like gold, start investing a little bit in gold, start investing in the euro, in the pound. We'll see currencies that are against the dollar starting to rise. This is one of the reasons usually why when you see one thing going down, you're seeing something else going up. Havens are critical. What we want to be looking for today and for the next couple of weeks as the month continues towards its end is to keep an eye on these switching markets. Keep an eye on how when the gold starts to reach its usual high points, it's at a weekly high right now. We'll see it invested in more until it gets a little unstable. Once we see that drop, start looking at the dollar, start looking at the euro to start moving upwards. Next thing in the market coming up today, again, is the U.S. dollar itself. All right, we have Janet Yellen's speech tomorrow. It's going to be actually more or less tonight at 12 a.m. GMT, right at midnight, so it's going to be during the day American time. This is another response to economic recovery, talking about what's going on there, interest rates, further stimulus. Janet has changed her view a little bit on the stimulus program. Before it was, let's give them cutbacks and cutbacks and cutbacks. Now they are saying that it might be necessary simply for the government to continue the stimulus program for longer than necessarily intended, so that the economy can continue a steady rise towards bringing itself back to normalcy. Now, talking about just a couple of other announcements that we have coming in today, we don't have a very large amount of un-U.S. or North American-related assets coming on today, but we do have the Philly Manufacturing Index as well, which is slated to drop. So we should be expecting, again, the dollar to be a little bit low today, the gold market to be rising. Euro should be doing a little bit better, but this is yet to be determined. Right now, what we're seeing in Eurozone, as each country kind of weighs in on its own economic strength, Germany is taking the lead here in economic strength. France is a little bit falling behind. Spain, Italy are not doing too well, but with the German strength and which has become the backbone of the Eurozone economy, we're seeing that the euro still has a chance to prove itself upwards, at least until the end of the week, before we start seeing a retraction towards a weak end of the month. So looking at the dollar, again, this is a better for the long term right now. Start looking to take it up for the end of the month. You can find those options on our platform. Euro to go down, and of course the gold market to probably drop by the end of the month. The gold market right now is the haven asset. It is trading high. Keep an eye on it at least until the end of the weekend, throughout the middle of next week, and we should be seeing some really nice results from that. Coming up just for tomorrow, just as you can see here, let me bring down the schedule so we can get a little bit more information on here. All right, we do have building permits, and we do have the prelim consumer sentiment as well. All right, tomorrow we're actually expecting a rise in the dollar from these fundamental events. All right, unemployment is something, and the unemployment claims are something that go up and down on a weekly basis. As people claim less one week, there will be more next week, simply because that's the way economy works. But building permits, and that means this is a great indicator for economic growth, meaning that more people are starting to get into construction, houses are being built, offices, so on and so forth. This is, if it comes out positive, a good, clear sign that the market is improving and that economically people have the money to spend. Banks are going to be healthy enough to offer loans to companies, businesses, and individuals in order to create that construction opportunity. Great for us. The consumer sentiment report, also same thing. All right, the fact if consumer sentiment does rise, that means people are more open to buying, making purchases, and not just the $5, $10 things you're going to buy at a store. We're talking about buying cars, buying furniture, all right, things that will rise up into the tens of thousands of dollars as well. If consumer sentiment is up there, we should be seeing a very nice positive outlook for the remainder of the month for the U.S. dollar to rise. All right, guys, that's what I have for today for you in the Daily Market Briefing. Thanks so much for coming in. Don't forget to hit like and subscribe at the bottom of the page if you'd like to stay tuned with us from Monday to Thursday at 9 a.m. GMT every day here at Opteck.com. My name is Rick Majors, here to wish you a happy trading day.